Rohit, quick word on the Nifty. We're up 20, almost 30 points now. You think there's more to go? At some point, we'll see a sell down once again.
No, I think there's more to go. I think that the 8420 mark is essentially the first hurdle, and my sense is that because the short-term indicators did not go to the sell side, at least on the Nifty, even despite all the global selling yesterday, that we can head up higher to around 8650 to 8680. That's the target that we are putting out in the near term, as long as we don't go below the 8170 mark.
Rohit, this target is essentially your target is going to be walking through what happens on Greece over the next couple of days, and it's going to come out unscathed. That's what you're saying.
No, I don't think I'm factoring in Greece on this because, I'm just looking at what our market is doing independently. Both in May and June, we saw a sell-off in our market, and both times there were some indicators that got oversold. There were others that did not, and that allows for some kind of a bounce. We saw a little bit in May. We just bounced back from close to 8,000 to around 8,400 in May, and again we've done that in June. So the point is that maybe these indicators need to cool off a bit more before you can see selling, because after expiration most positions have been cut off. The rollover this time wasn't really big, so there isn't much position to really get a panic. If you want a panic, somebody's got to sell. If you don't own anything, what are you going to sell? And there are other people who've been mostly buying deliveries. They don't panic on a few percentage points move here and there. So I think for that reason, the bounce back would get a little bigger. You're somewhat retracing most of the losses that we've seen since the March high we made at 9100 all the way down to 8000, and 61% of that comes to around 8680. So I'm keeping the maximum upside to that level right now, which can happen over a couple of days. So that has nothing to do with Greece. I think Greece is a separate issue which will have its impact. But in the short term, I think things might get discounted. What you'll start worrying about is more the medium term and longer term impacts as you go forward.
Right. Now, okay, fair enough. I mean, you're saying the market inherently looks set for about 8,600, right, on its own. But, I mean, okay, let me ask you specifically. So how do you think about Greece and the impact of that here on India?
Like I said, there's no, in the short term, because we are oversold, we're not seeing an impact. That is one. Second is, I think the direct impacts are going to be talked down by everybody because the issue has been around for long. We've been building reserves and saying, oh, well, it won't affect us. And if you look at most currency markets, everybody's defended their currencies. Even if equities were down, the euro bounced back, the currency rupee is also, stronger today. And most currencies overnight have been stronger. So I think people are defending their currencies from any kind of risk from this. And they're making claims that, well, okay, if there's a problem, it doesn't affect us. US is saying, oh, it won't affect us, and so on. So I think that short-term talk of that it doesn't affect us is likely to keep the markets stable after the initial panic reaction. And then you're going to start thinking about whether there are any macro effects, whether it's going to affect banks and so on. And I think those troubles are there down the line.
Yeah. Okay, fair enough. Now, I'm just saying that, all your points are valid, but you began by saying that the markets are oversold. I thought we were up almost 400 points from the lows, Rohit. And, I mean, after 400 points, yesterday, 60-point cut. Yeah.
I look at a handful of, sentiment indicators from the derivative side and market internals. And many of them, apart from, one very short-term indicator, which was a little overbought by Thursday, Friday, for which I think we got sufficient reaction in the last 2 days. A lot of the medium-term ones, say, for example, there's something called the volume put-call ratio. Now, this ratio, right up to Thursday, was at, almost 0.7, which indicates that too many puts were getting traded versus calls. So, even as the index was at 8,400, people were still very, very bearish. And so that's a contrarian indicator. You'd like to see that cool off maybe to 0.4, 0.3 levels before you actually see some kind of a top. So these are extreme. There are a couple of other such indications which were there. Not all of them. Like if you look at FII positions themselves in the futures market reported by NSE, they had cut back all their long positions, which were almost 8 lakh contracts in March, April, down to zero in May and June. And they were not going short, throughout June, even as the market came off, they were not adding shorts. And after expiration, they are long 2.5 lakh contracts order. So, that shows that, you're really not selling. There's no selling taking place, and you've been seeing domestic buying. So that is an oversold near-term condition, which is causing the bounce back. So I would call it a technical bounce back, a retracement of the selling that we've seen for 3 months. I don't think it's it's not a longer term trend reversal, but it does allow us to go up a little more than what we already have.
Okay, all right. So that's that. Rohit, anything to do out there at this point?
Well, I mean, even on our portfolio, we've been long for the last couple of days, so we're just hanging on to those positions. We've seen some strength coming back to maybe the private sector banks and so on. We're looking at trades which are like for a couple of days, 3 to 5 day kind of a trade. If we do go to 8600 and we try to make some points on that, that's about all we are looking for. So it would be a short-term trade. But again, it's possible that the index remains volatile while this issue is still going on between 8420 and around 8200. So unless we get past 8420 in the very short term, it's also possible we just move up and down within this range, 200 points up, 200 points down, and then only later break out of it and end up at at a higher level. So that's the kind of structure. So do we immediately go to 86, or will we bother just be volatile in this 200 point range and then go up maybe a week down the line? And so we'd look at very selective trades. We wouldn't be very aggressive here. We would take wouldn't go overboard on it, because it's only a near-term trade and you could be in the wrong stocks completely. We are also entering result season, so once again, I don't think we are looking at a very good earnings quarter. So we're just looking at the stocks that have held out in the June sell-off, like Larsen was one which did, BHEL was one which did. These are stocks that did not fall in June, even when the index did. And you can look at them for a short-term trade up. That's about all that we would do.
Okay, Rohit, just one quick question before I let you go. So what happens to the Fed rate hike, Rohit? I mean, you think that takes a backseat if Greece were to go out of Eurozone?
Well, they've at least managed to postpone it till September, so I think they'll have a lot of time to think about it. And their decision will most likely be based on the US economy itself rather than what is happening in the Eurozone. So I think it will be an independent decision based on how the economy is doing. If they see the numbers that they're looking for, they'll probably go ahead and hike. So far, if I go just by their statements, they do want to hike and then do it with very, very small baby steps. So I think they're likely to most probably go along that path.
Okay, all right. So that'll be dependent on what happens in the US. But let's see what happens after today when the deadline expires. And of course, there's a referendum as well, which is scheduled on